Let's welcome the management on board. We have Mr. Sanjay Jain, the Group CEO at PDS Limited, joining us. Sanjay, hi. Thank you so much for making time and speaking with us this afternoon. Let's begin by discussing the demand outlook as of now, because of course a large part of your business, 70 to 80%, is predominantly from US and Europe. But given the headwinds that we are hearing, what kind of slowdown are you seeing in the business at this point of time?
Yeah, hi, good afternoon. I think as we have mentioned earlier, the medium to long-term outlook of the business is very well intact, wherein we have an aspiration to develop our turnover and with a commensurate increase in the profits. But in the near term, yes, there is some uncertainty, especially coming in from the UK, Europe, and US markets. But what's happening at present is many of the US retailers, for example, are giving a growth outlook, though a low single digit growth. Some of them have also reported a correction in the inventory position, wherein for two, three retailers, large retailers, the inventory has improved in terms of number of days as compared to the same period last year. But I guess it's too early to draw any conclusions here. These signals are beginning to be positive. But for these to translate into growth for the industry and for PDS in particular, one will have to wait for a couple of quarters. So therefore, as we mentioned earlier as well, that the near term, there could be some uncertainties, but medium to long term is very well intact.
So, what about the order inflow momentum? Has it completely dried out? Because for at least calendar year 23, I'm sure the order inflows in a usual cycle should have been in by now. Are they very, very tempered as of now?
See, in the first 9 months of the financial year 2022-23, we had a robust 29% growth, then about a 15% growth in the third quarter, while for the 9 months of 29. So yes, there is slowness in the order book in the near term, as I said, for 1 or 2 quarters. But the anticipation is that as the retailers in US and UK and Europe are in a position to have corrected their inventory position, which we believe that process is now already at an advanced stage. The order momentum should pick up in the later half of the financial year 23-24. Therefore, on the whole, in terms of dollar growth, one expect a kind of single digit growth, a medium single digit growth for the entire year. And if, of course, the dollar rupee depreciation, PDS believes for the 23-24 period, there could be a single digit growth in terms of revenue.
So can you just talk to us about the business momentum as a whole? And I'm talking about PDS, the sort of expertise it has in terms of risk management, and how you have gone ahead and made it a sort of a process in the textile part of the business. So why you get an edge when the demand is high?
See, what PDS has done on the front end is a very well diversified revenue base in terms of geography, diversified across UK, Europe, and US. PDS is also focused on the value segment, which get least impacted whenever there is any downturn. PDS also has a very broad customer base, wherein no single customer, is more than kind of 9 to 10%. Top 10 is about 70%. And on the sourcing side, PDS has got close to 600 partner factories based out of Bangladesh, India, Sri Lanka, China, Turkey. So PDS ability to withstand any such short-term uncertainty is far more. Another important thing is that PDS has kind of worked hard to come to a stage of, one-stop shop global fashion infrastructure company. So therefore, as the retailer is choosing to focus more on their core business of interfacing with retail customers, they want to let go a lot of their internal processes, a lot of their internal management or procurement to credible third-party companies. And that's where PDS is seeing that even in these challenging environments, there is an opportunity that through its new offerings of catering to the entire back-end management of the customers, we are able to get a larger share of wallet.
Sure.
That's how PDS unique strengths are, in the present environment that is prevailing.
Sure. Sure, Sanjay, point taken. But just quickly before we let you go, a word on the margins as well, because of course the kind of business you have is more, with respect to operating leverage, and the top line matters a lot more. But with respect to the, EBITDA margins as well, are you likely to trend higher than 5%?
Yeah, so before I specifically answer your point, our margins need to be seen in the context of the blue chip, relatively blue chip customers we work with, and therefore the predictability of the revenue. So these numbers won't really, if at all there is uncertain times, our ability to maintain these margins is well intact. But now to specifically answer your point, we believe from a current 5% EBITDA margin level and a PAT of about 3.25, we clearly see a potential of about 100 basis point improvement in about 2 to 3 years, gradually improving 50 basis point every year for the next 2 years or so.
Sanjay, we'll let you go on that note. Thank you so much for joining us. So 100 basis point improvement possible in the profitability and margins, but over a medium term, and the outlook for the medium term too looks strong, though for FY24 they're expecting a single digit kind of growth. But let's